As the summer lull recedes into the background, the pressure is back on Europe's leaders to make a significant breakthrough in the debt crisis. With the US preoccupied by the presidential election, attention on this side of the Atlantic centers firmly on Frankfurt. Welcome to our look at the week ahead. The ECB President Mario Draghi will be in the spotlight as never before next Thursday when the Governing Council meets to decide on policy. Draghi ignited market expectations last month by saying he'll do whatever it takes to protect the euro. Well, now comes the time to deliver. Will the ECB go beyond a fresh programme of government bond buying? Unlikely, says Christian Schulz at Berenberg Bank.
The key question is it just going to be this spread cap type of intervention to stop the market panic, or are they also going to alleviate monetary policy, cut rates, do more LTROs, that sort of thing? We would not expect any rate cuts or LTROs in the short term. We would expect them to try to make the policy work rather than make it even looser than it already is.
Shuttle diplomacy will again be the order of the day as Europe's politicians look for a way out for the crisis. The German Chancellor, seen here with Italy's Mario Monti, will be in Madrid for talks with the Spanish Prime Minister on the same day the ECB is meeting. Mariano Rajoy says Spain won't ask for sovereign help until ECB policy is clear. Also Thursday, Spain will test the market sentiment with its first bond auction for a month. Ben Bernanke and Jackson Hole giving markets some of what they expected. The Fed chairman says the central bank will provide extra policy accommodation as required. Bernanke also insists the Fed must not lose sight of daunting economic challenges facing the US. And he maintains the first two rounds of QE added nearly 3% to US output and lifted employment by 2 million jobs. Economic data will be dominated by US non-farm payrolls out Friday. Economists polled by Reuters expecting a gain of 135,000 new jobs. And the unemployment rate forecast to edge lower to 8.2%. As November's presidential election approaches, James Ashley of RBC Capital Markets says the big picture outlook is deteriorating.
The US economy is looking increasingly weak. We've just revised down our Q3 forecast. We think that GDP in the third quarter will be only 1.5%. For Q4, it's looking even weaker than that, probably a sub 1% reading. And unless the fiscal cliff is addressed, then I think early next year it's perfectly possible that we could get some negative GDP readings. So I think the US economy is in for a serious prolonged slowdown at the moment.
Shareholders could finally torpedo commodity trader Glencore's $31 billion bid for mining giant Xstrata. Qatar Holding, which has built a 12% stake in Xstrata, says it'll vote against the deal next Friday unless Glencore increases its offer. Airlines will be making headlines in the absence of any big company earnings figures. Air Berlin and EasyJet will be giving traffic updates Thursday, followed by Air France, KLM, SAS and Finnair on Friday. The passenger numbers are likely to reflect the tough conditions in the aviation market. That is all from us for now. Join us throughout the week for Reuters Today, a snapshot of the latest world news and market headlines. That's at 8 a.m. London time. I'm Axel Threlfall. This is Reuters.